right. Hello, everybody. Hi, friends. Thank you so much for joining me here today. Today, I have the exciting job of sharing with you some of the details because of the Biden-Harris administration student loan forgiveness. You probably have seen a lot of headlines. I've been posting about it earlier today because we've known this has been coming for a while. We've known to expect something. It's been floated that it would probably be this $10,000 amount. And finally, today, we have some official answers. So the news media is going to be all abuzz about people's reactions and all this stuff. But what is actually happening? What does it mean for you? There's some actually pretty cool, interesting things hidden within the document. So I'm going to do, it's going to probably be the least visually interesting thing ever. I'm going to actually share directly from the government website. I shared this earlier on the Plan and Act page. What this website is, it's from the actual federal student aid site, so you can actually see what does it actually say. Never mind people's reactions. What does it actually say? So that's what I'm going to be sharing from. That's what I'm going to be working off of. If you have any questions as I'm talking, please feel free to comment below. Give me 1 second while I'm going to make this big so I will see your comments as well. And let's dig in. If you have any questions, just like I said, share them below. Comment here. While I'm talking, actually don't forget to like our Facebook page, Plan and Act Financial Planning. That's where you're going to get a lot of really useful content such as this consistently. So let me share the screen. Boom, boom. All right. The Biden-Harris administration student debt relief plan explained. This is the headline you're going to be seeing. What it means for you. Biden came out today in a brief overview. Biden came out today, said that he's going to forgive $20,000 per borrower for Pell Grant recipients, and it's going to be $10,000 per borrower for non-Pell Grant recipients. And these are for federal student loans. So if you have a student loan from a private lender, then this student loan forgiveness is not going to apply to you. However, it is possible that this might have an effect on interest rates. So this might be able to be a good time to have leverage on getting some better rate from your private student loan lender. We don't know. It's always a good idea to just kind of re-examine what your interest rates are anyway. That's something that Plan and I could help with if you're interested. Highly recommend you come check out this site in particular. Again, this is from the studentaid.gov /debt-relief-announcement page. We shared this onto the Plan and Act page a little bit ago. So highly recommend you come check this out. So let's kind of dig into this. First things first, there's one final extension to the student loan repayment pause. This pause has been going on since the beginning of COVID. It's been extremely helpful for a lot of people. Why? Because this has helped with cash flows that people gotten back on their feet from COVID, from quarantine, from shutdown, and all that. Also, during this pause, we haven't had to pay any interest on federal student loans. Again, this is an advantage for federal student loans only. So one more pause. So payments are going to begin in January 2023. So this is going to also give, from an administrative point of view, this is probably going to help with a lot of the administrative side of things, because there's a lot of things happening in this plan. And by having one more pause, it's going to buy them some time before they have to start taking payments. And you might have noticed that some of the actual people you'd have to pay for your student loans has actually changed in the past couple of years. Contracts have changed and things like that. So this one more pause is probably also, I'm guessing, it going to be a little bit motivated by just giving a little bit more time to make sure that all the I's are dotted, T's are crossed, and all that. You don't need to do anything for the extended pause. That's going to just happen automatically one more time. However, keep your eyes on your inboxes about November, December, because you're probably going to start getting some emails from the lender, from the government, basically saying your loans are going to be due again. You're going to have to start making a payment. Also at that time, for a lot of people, finances, the thing I've said before about our superpower as humans is that we adapt to anything, and our cash flows are the same way. So our cash flows have probably adapted and adjusted to not having to make these student loan payments in the past couple of years. So this is definitely something to bear in mind as this date approaches, as January 2023 approaches, start thinking about like how are we going to fit this this new payment into our cash flow, into our budgets, things like that. It's not a fun thought, but it is a necessary thought. So start thinking about that now. Start trying to build that buffer in a little bit. Start building maybe a savings to be able to pay down your student loans once that starts up again. One of the things that this pause has also given people is an opportunity to also build a little bit more of their net worth. Some strategies we've pursued with some clients have include things like, rather than putting money towards student loans during the pause, instead building up a little bit of a stable portfolio. That way, you're basically that portfolio grows a little bit, and you're going to be able to pay off your student loans with some of that money, and you're going to have made some extra money in the meantime. So there's a lot of options that actually have come with this student repayment pause. If you're interested in exploring what some of those might be for your financial situation, that's the time to talk to a financial planner. Financial planning is what ends up getting big returns in the long term, taking advantage of things like this. Planning is that's why I have fun with this stuff, because that's how you make money, having a solid financial plan. Let's go down a little bit more, because this is going to be what all the news articles are going to be talking about. That $10,000 per borrower, and it's going to be there's going to be an income cap on that. So your individual income, if you're an individual, when you go to file your taxes, if you file as an individual, your income is going to have to be less than $125,000. But if you're married filing jointly, your income is going to have to be less than $250,000 at that point too, is what it's looking like. This income number specifically, these two numbers right here, probably are going to be based off of what's called your adjusted gross income or modified adjusted gross income. So what that means is, for instance, if you have most likely, like let's say you have a 1099 work, this is going to be, by the way, you're getting a little bit of a crash course in how taxes work while we're talking here. If we're looking at, for instance, a 1099 work, you might have, let's say, $10,000 in income from 1099 work. But if it cost you $9,000 in order to make that $10,000, for instance, you got it through marketing, you can deduct stuff from marketing, you had to do professional development, things like that, all kinds of things like that end up being deductible. Your actual income ends up being only $1,000. So that's a pretty important distinction to make. So this is probably not going to be gross income. This is probably going to be adjusted gross income. It's just a different line item on your tax return. You'll be able to go back in your previous year's tax return, look at your adjusted gross income, and that'll tell you right around where you're probably going to be for this year as well. Why is this important? Because again, it's not basically, if we're thinking of ourselves, each person as a business, it's not going to be revenue we brought in. It's about how much profit you make in a year is basically a way to think about it. Once again, that cap is going to be $125,000 for if you're filing individually, or $250,000 if you're filing married or head of household as well. I think it says somewhere in here. This is important too, because it's $10,000 per borrower. So basically, let's say if you're in a married couple, you're married filing jointly, one person makes $100,000 that year, the other person makes $130,000 that year. Together, you're making $230,000. That's still going to be underneath that $250,000 cap. That should be from the way that this is worded, that should be how it works. That's going to be the simplest way for it to be implemented. So that's going to be something we're going to look for come next tax season, and as we're going to see in a little bit further down here, they're going to probably use your previous year's tax return in order to be able to calculate all this as well. It's $10,000 per borrower, unless you had a Pell Grant. This is something important to point out. If you have a Pell Grant, that student loan forgiveness goes up to $20,000 for Pell Grant recipients, which is pretty awesome for Pell Grant recipients. Also important to note, it's that and this is something they've actually been working on for a while now. The public service, there it is, the Public Service Loan Forgiveness Program. They've been really pushing that actually for a few months now. trying to change eligibility and criteria for that so that more people become eligible for it. The Biden and Harris administration's actually been really proactive about trying to make sure that people who are involved in public service get a little bit rewarded for being in public service. Public service is notorious for not being great at rewarding people, so this is a really nice little bonus that they've kind of been trying to create for people. Let's scroll on down here. How do I know if I'm eligible for debt cancellation? Once again, that's at $125 for individuals, $250,000 for married couples or heads of households. If you have a Pell Grant, you're eligible for up to $20,000 in debt cancellation. Everybody else gets $10,000 in debt cancellation per person. What does it mean up to that amount? That means that, for instance, if you only owe $6,000 left and you paid, and if you only owe $6,000 left on your non-Pell Grant loan, you're only going to get $6,000 forgiven. You're not going to suddenly get a check for $4,000 in the mail. As nice as that would be, that's not going to happen. Why is this also important? This is something that I think I made a video about this probably 2 years ago. This is one of the reasons why we want to there's a difference between good debt and bad debt, and debt payments, planning debt payments is an extremely important part of financial planning as well. Back in the day, probably 2 years ago, when the student loan pause began, I think I posted a video that was saying, like, if you're afraid of debt, you're probably going to put all your money towards paying off the debt. But if you hold off, if you instead put that money towards a portfolio, things might happen where you end up getting some sort of there might be student loans forgiven in the future. And either way, it's an interest-free loan that the government is giving you. This is a perfect example of that. So basically, you're getting a little bit of a bonus because the government wants you to spend that money on the economy and wants you to go out there and spend. Spending is what keeps the economy going. Spending on things like things you need around the house, spending on things like food, going out to eat and stuff like that. Why? Because then that pays other people's salaries and things like that. And then they get to spend too. And it's the circle of economic life, basically. Moving on down, what do I need to do in order to receive student loan forgiveness? For most of us, we don't need to do anything. That's going to be pretty convenient. Why? Because the Department of Education already has access to a lot of our information. The other thing is, if they don't have the information yet, then they're going to come out in the next few weeks with a simple application, so that way you can make sure that you're going to get your student loan forgiveness. This would be a good point to sign up for the Department of Education subscription page. That way you can be kept up to date to make sure that they do have your most up-to-date information. Moving on down, this is something else that I don't think that the news media is going to talk about a lot, but this is something that I'm actually pretty excited for. Make the student loan system more manageable for current and future borrowers. What's it talking about? It's talking about income-based repayment plans. Now, when I discovered these 7 years ago or whatever, I was pretty excited. Why? Because it basically says it does a calculation. You're probably familiar with this, but it does a calculation, and then it goes, this is how much we think you'd be able to afford to pay. Back in the day when I first signed up for it, I wasn't making much money, so my monthly payments were zero. The thing is, though, with that repayment plan is that the plan is that as you earn more money, you start being able to pay more and put more money into it. With that repayment plan, even if you're making a $0 per month monthly payment, by the end of 20 years, it said, oh, your student loans are going to be forgiven so long as you stay up to date on your payments, all based around what your current income is. The Biden-Harris plan is trying to just update that a little bit, trying to change some rules around. This becomes important because it's capping the monthly payments at 5% of discretionary income, monthly income, discretionary income. It's also changing the way discretionary income is calculated. So now it is 2.25 times the federal poverty level for your state. So that's something you'd be able to look up. Basically, it's saying that anything less than that 2.25 times that poverty level, it's not included in the calculations. Above that amount, it's considered discretionary, and it's capping it at 5% above that amount. So this is an incredible thing to be able to take advantage of. These are things that I'm sure that you're not going to see pointed out anywhere else. Student loan balances, instead of 20 years, they're going to be forgiven after 10 years. After 10 years, making that timeline that much shorter. So you're going to have that student loan forgiveness available to you that much sooner. And also, this is something that I don't think a lot of people are going to notice. It's going to cover the borrower's unpaid monthly interest. I'm going to use me as an example. I was doing, when I first started the income-based repayment plan, I was doing $0 monthly. Obviously, the income that was accruing on that loan was more than $0. Back in the day, that interest would just accrue and compound, and it was doing its thing. And I was fine with that because I knew that I had to look forward to forgiveness in 20 years, no matter what it was at. But that loan kept getting bigger. You've heard a lot of people say, I've paid so much money into this, and the loan is more than what I originally borrowed. With this new plan, it's going to cover the unpaid monthly interest. And as you can see here, no borrower's loan balance will grow as long as they make their monthly payments. So even if, let's say, you put $15 down per month and the interest is supposed to be like $35, $100, $2,000, that loan will not get any bigger. That becomes extremely, that ends up becoming another huge potential subsidy for people who have some pretty large loans. So that is incredible. And once again, you can see here that applies even when the monthly payment is $0. This is something I don't think the news media is going to catch, that little tidbit there at the bottom, but that can be a potentially enormous subsidy that the government is going to basically be giving us. So there's going to be a lot of reactions to this. Already I've seen people talking about what's the effect going to be on inflation, what's the effect going to be on all kinds of stuff. It's a complex matter in that way as well. Some people saying it didn't go far enough. This $10,000 was probably the right down the middle choice. I think 55%, some polls said 55% of people were in favor of $10,000 student loan forgiveness. And then that number started to go down beyond that. It went once that loan forgiveness went higher than that. So this is probably the most popular choice that could have been done. But some of these things that were built in here, such as this student loan balance is forgiven after 10 years of payments and covering the borrower's unpaid monthly interest. For student loan borrowers, those are going to be some pretty big subsidies that you're probably not going to hear about from other sources. So what does this all mean for you specifically? It could mean a lot of different things. It could probably means a lot of different opportunities that are opening up for you. If you're curious about how to take advantage of this, reach out to me. Let's go over your plan together, because everybody's different. We can go over your loans. We can talk about what opportunities are available to you. One way or another, stuff is changing. You're going to see a lot of stuff in the media coming up probably, but this definitely means a lot of opportunities available for a lot of people. Thank you all so much for joining me here today. I hope you all have a wonderful rest of your week. My name's Henry. I'm your friend in finance. If you ever have any questions about money, please feel free to reach out to me. I'll talk to you all soon.